Good Friday afternoon to you. Welcome to the John Sanchez Show on News Talk 780 KOH TGIF. As you just heard from Jack and from Kristen, I echo that sentiment with about 5 exclamation points. Been a long week, folks, but you know what? We're just about there. We're just about there. You know, when it looked like this Iranian situation was going to be resolved, I know you're saying, well, which time, right? How many times were we told we have a ceasefire? We don't have a ceasefire, so on and so forth. I cautioned everybody that I never, in my personal opinion, I never saw it holding whatsoever. And the reason I'm starting the show off with this is because this is a major headline. We launched more attacks today, just a few short hours ago. We launched them yesterday. There's been every day it seems like. Maybe we missed a day, but there's been 5-6 consecutive days now, I believe, that air attacks have occurred. And then, of course, counterattacks by Iran to neighboring countries. But this market just doesn't seem to care that much about it. And you may look at the headlines, or you may wonder after I tell you how this market performed today and go, wait a minute, the market was down today. What do you mean it didn't have any impact? We even had an uptick in oil prices today. $2.69 rise, $81.67 a barrel. Again, well off of that 112, 113 mark we hit at our peak a few months ago. But normally when you see a spike in oil this much, the market would react negatively to it. Well, again, it had a negative day today, but it's because of something else. And I'll tell you what that something else is in just a moment. But first, let me tell you the topic I'm going to be covering for you this Friday afternoon. Of course, I'll be recapping the week on Wall Street. But as I promised you last week, I'm starting a new segment every Friday. It's called the John Sanchez Playbook. And I'm going back and I'm looking at things really, yes, it's financial related, but it's also personal related and family related and things like that, right? Kind of a guideline that you can live off of. And again, if you want a copy of today's financial playbook on the following topic here in a moment, just send me an email, john@sanchezgaunt.com. Be more than happy to send it over to you. But here's what I want to discuss with you. You know, I am not one to look back over time. I don't look back on mistakes. I don't look back on great things that have happened. I try to live in the present and in the future. And it's the same thing that I tell my clients when they go, oh my gosh, I wish I should have, could have, would have bought this investment or that investment. And I always give them an analogy, and I try to live my personal life by this. And that analogy is this. I don't drive the car by looking in the rearview mirror. I look through the windshield. And it should be the same thing in our financial lives, right? We always need to learn from mistakes, but we shouldn't dwell on them, because when we dwell on financial mistakes, what happens? We spend all of our time and all of our energy on that instead of looking for opportunities to make money and to build our wealth and to protect our families. So, with that said, let me tell you what I've lined up for you this afternoon. I've titled today's show, The Financial Decisions You Wish You Would Have Made 10 years ago. Think about that for a second, how powerful that is. The financial decisions you wish you would have made 10 years ago. And I've got, 8, 9 of them. I can't remember. I don't have my notes in front of me, but there's a lot of them. And it's going to be fun to look back. And I want you to have 2 takeaways from today's show. Number 1, as I go through my list, I want you to think to yourself, yep, I agree, or nope, that doesn't apply to me. But more importantly, I don't want you to dwell on them if some of these mistakes, you did make, because we all make them. But more importantly, these are mistakes that we can teach the next generation. We can teach our children, our grandchildren, our friends, our family. Because if if some of your financial mistakes are not on this list, that's okay, because Lord knows there's more than 9 or 10 of them. I know that for sure. But it's going to be a really fun topic because, again, if you could go back 10 years, what financial mistakes would you do differently? Would you have saved more? Would you have invested sooner? Maybe you would have bought real estate or more real estate. Maybe you would have started a business. Maybe you would have created an estate plan. Who knows? But again, that's what today is all about in the John Sanchez Playbook. Because again, we want to learn from what our mistakes were in the past. We don't want to repeat them because we're going to make fresh ones going forward. We always do. And everybody does. Everybody does. And we're going to learn from them. And we're going to pass that knowledge onto our friends, again, in our family. It's going to be a fun Friday topic. But not quite so fun is the recap of the market. So let me get this bad news out of the way. We didn't really have much of a hope or prayer today because significant sell-off occurred overnight in the Asian markets. Now, it wasn't oil. It wasn't the missiles flying in Iran and so on and so forth. But it was the semiconductors. again. Second day in a row, we've had significant sell-off in this area. And this is a frustrating area that I want to spend a little bit of time talking about because it is an area that keeps me awake at night of the portfolios that we manage. Why is that? Because semiconductors, well, they're like an octopus. Their tentacles go throughout the economy, right? Think about it. Everything just about that we use electronic wise, it's got a semiconductor in there. Now, it's not just the overvaluation that has concerned investors. It's the spending. We're back onto this spending spree and spending concern that has affected this market on again, off again this last year and even, some of last year. And the spending is, are corporations spending too much on AI design, build out, so on and so forth? I want to read to you one comment by a senior strategist. I don't know what firm she was from. She says, we're seeing signs of fatigue with end user demand for AI becoming more price sensitive and the market starting to penalize companies that are ramping up spending too aggressively. I'm sorry, she's from Angela Korkofis from Edward Jones, senior investment strategist. So let me read that again. We're seeing signs of fatigue with end user demand for AI becoming more price sensitive and the market starting to penalize companies that are ramping up spending too aggressively. That was beautifully, I'm sorry, it's a man, not a woman. That was beautifully said by him. He said, we view this volatility as a signal that the AI theme is likely maturing rather than breaking, which is a healthy part of how transformative investment cycles evolve. I couldn't agree more. I could not agree more. And that's what we're facing at this particular time. We're concerned about valuations. We're concerned about overspending. Now, here's the bright side, right? Because it's Friday. I'm gonna be optimistic with you. I'm hoping and praying that this is short-lived, right? Because we've seen this. I've given you the analogy, I think, twice this week. We're kind of taking 2 steps forward, 1 step back in the market. We did in the week down right across the board with the major averages. S&P lost 1.6, NASDAQ down 2.9, and the Dow was down just 0.9%. So it's starting to eat in a little bit to our return numbers. But the reason I'm spending some time on this, I want you to watch it closely. Even if you don't have semiconductor names in your portfolio, it impacts the overall market and specifically the NASDAQ. Because we don't see all technology stocks go down when the semiconductors go down, but we see a lot of them. Again, back to the octopus theory, the tentacles are very broad-based of semiconductors. They affect many, many areas of technology. And then that affects, of course, the overall market. So I can't tell you the name of this ETF, but I'll just say it's a major ETF. It's a semiconductor ETF, so it owns many, many names in that space. It posted its third weekly decline on the last 4. So you see the trend that we're starting to develop? Dropping almost 9% in this period. Now, the other factor besides the valuation that impacted the market today was this. There's a Chinese startup. I've never heard of it until today. It's called Moonshot AI. They unveiled a new model that it said narrows the gap with the top offerings in the US. So back to, remember DeepSeek, remember that name a while back? That was that, I don't know what they consider. They're technically a hedge fund, but they also do semiconductor development and so on and so forth. But remember how that impacted the market? Well, let me share with you this really great story very quickly before we, I'm going to wait till we come back from break because it's a little bit lengthy. But I found some great information about this company. It really fascinated me when I read about it this morning and what they're doing. And then we can kind of conclude again, is this going to be something that's short-lived or something a little bit longer-lived here in the U.S. in regards to our semiconductor companies and others, frankly, around the world. Welcome back to the John Sanchez Show on Newstalk 780 KOH. Happy Friday to all of you. All right, I'm in the midst of describing what happened today and, of course, the week. And then we'll get into our topic, the financial decisions you wish you would have made 10 years ago. Yeah, it's going to be a great learning lesson. All right, here's how we finished up in the market. Then I'll get back to the semiconductor story. So on the Dow side of things, we lost 407, 0.75%, not major. 52,146 was our level. The NASDAQ gave up 361 points, 1 point to 25,520. S&P lower by 76 points, 1.01% decline to 7,457. And the Russell 2000 down 12 points or 0.42%. Tell you, I'll be honest with you, my heart was racing a little bit this morning when I did my final stock update with Ryan Nutter this morning at 6:23. We had the NASDAQ futures down 618. We had the Dow futures down 508. And I tell you, the way things were selling falling off, and we lost over 100 points within 30 minutes of my previous report on the Dow side of things. So we were falling pretty fast. And I was thinking to myself, this is starting to shape up to be a day where, one of those days, we haven't had it in a bit, but one of those days where we could have easily seen a 1,000-point loss on the Dow. It's forming itself to do something like that at this point. Okay, so now let's go back to the situation. I told you it's about valuations, right? You've heard me say this a million times. So this is what we're facing right now. But also, the other reason that we had the problem in the semiconductors, which dragged the NASDAQ down, was, again, this new Chinese startup called Moonshot AI. So I read the story, and I'm going to change my mind. I'm not going to share it with you because it is very, very technical, and it's the last thing you probably want to go over on a Friday. So read about it if you want over the weekend. There's all kinds of information out there regarding it, but it's just another version of the AI models, very fast, very efficient, so on and so forth, that are saying that, it could outperform, or it is outperforming Anthropic and OpenAI in some different areas. So once again, everyone comes back to, geez, here we go. Is China creating the best AI model or models at the particular time? And then that impacts many of the names here at home. So that was, again, one of the big issues there. We had the Philadelphia Semiconductor Index today down 1.6%. Cadence Designs among the group's weakest in the information technology area, losing about 9.47%, $34.54 decline to 330.11. Synopsys, electronic design automation software company, down 7.85%, $32.76 loss to 384.28. Meta was another drag, down $18.53, 2.79% loss to 646.01. Google down about $7.69. Netflix, which had a pretty good earnings report, I should say, after the close yesterday, but there was a couple pockets of weakness and as well as guidance, and they got punished today, lost 7.26% or $5.40 to 68.95. Intuitive Surgical, this is obviously a fascinating company of robotics used in the surgery room, down 14.15%, $56.91 loss to 345.42. It was the worst performing stock in the S&P 500. Reported good second quarter estimates. Investors focused on the unchanged outlook that implies slower Da Vinci procedures going forward in the second half of the year. On the commodity side today, as I said, we gained $2.69 to $81.67 a barrel. Gold rose $26.40, closing at $4,018.70. And it was pretty quiet in the bond market. We're down just 3 basis points for the day. Closing yield 4.54%, and only down 3 basis points for the week. Where do we sit on a year-to-date basis? Here we go. NASDAQ is only up 9.8%. That hurts. Russell 2000 still hanging in there. Those small caps, told you about those. 19.4% gain, hanging in there. S&P for the year is up 8.9%, and the Dow for the year is higher by 8.5%. All right, you are now up to date on the market for the day, for the week. Let's get down to our topic, the financial decisions you wish you made 10 years ago. But the best time to make a smart financial decision wasn't yesterday. It's today. Okay. So again, we're not driving the car looking in the rearview mirror. Every one of us has looked back at some point in our life and we thought, I wish I would have. I wish I had started investing sooner. I wish I'd bought that one rental property. Man, I wish I would have paid off some debt. I wish I would have created a trust to give peace of mind to my family. Right? How many of those questions have popped into your mind? And regrets? Well, the good news, today is the day your future self is looking back on it. The financial decisions you make this year, starting today, will help you determine how you're going to live 10 years from now. Yeah, there's nothing we can do about the past. Let's focus on the future. All right, here's one financial decision. I fall into this camp. Start investing earlier. I'm in the midst of writing a financial plan for a fairly young couple. They're 41 years old, make a very good living. They live in California, make a very good living. We're going to be doing their estate plan for them and everything also, kind of everything. And I ran some numbers for them the other day. And every time I run a financial projection for a young couple, as many, thousands of times I've seen it, I still get blown away at the compounding effect of money. And it wasn't anything significant. I had them maxing out their 401ks. I showed them some ways that you can exceed the normal contribution limit by being a business owner. But overall, it wasn't a significant amount of money being socked away each and every year. I think, if I remember right, I think it was around 50, 60 grand a year. But because they're young, I ran the projection out to 65. Folks, they would have had over $4 million saved up. That's the compounding effect of money, right? Again, I wish someone would have taught me about it. I never really paid attention until, I became a broker in 1993. Yeah, of course, I had to at that point. But I've shared the story with you. One of my first, corporate jobs, I was a credit analyst. We started off as a repo man and collection man for GMAC, and I've shared this story that I used to sit in the break room, and I was, I don't know, but 23, 24 years old at that time. No idea what Wall Street was, nothing. But man, Ted knew a lot about the market. Ted was about, I don't know, late 50s, saved a significant sum of money, been with General Motors for eons, had huge sums of money saved up in his 401k. So Fred was the guy that all of us young people would go to and ask Fred, how do we allocate it? How much do we put in? So on and so forth. Wish I'd have listened to Fred more, because man, that compounding effect of money when you start early is mind blowing. Even small amounts, just the compounding effect. Remember, Albert Einstein said compounding of money is the eighth wonder of the world. Run the numbers. I 100% agree. Time, right? Well, we all know how fast time goes. My goodness. And consistency. Don't we all wish we would have been more consistent? And again, that's something that many of you can stop doing or start doing now. Be more consistent, even if it's a small amount. Put it in that 401k, put it in that IRA on a regular basis, put it in the brokerage account on a regular basis, right? Even if it's a small amount, just do something on a regular basis. And ask yourself this: what if I started investing this month instead of saying, I'll do it next year, or I'll do it when I get the raise, right? That's human nature. We want to postpone. It's like estate planning. I can do it later. I can do it later. Well, before you know it, later is here and you haven't done anything. So start now. All right, we come back. I'll give you my playbook number 2 on the financial decisions you wish you made 10 years ago. Welcome back to the John Sanchez Show on News Talk 780 KOH. Happy Friday to all of you. Once again, I had a bit of a challenging session today. Finished down 407 on the Dow. NASDAQ lost 362. The S&P down 76. All right, I'm going to get back to our topic, the financial decisions you wish you made 10 years ago in just a moment. But first, I have some absolutely incredible breaking news for you. Here we sit at 3:37 p.m. on Friday, July 17th. None of you feel like cooking tonight. So where may you go? Taco Bell, you say? Well, I've got some good news. If you've been concerned about the tainted lettuce, guess what? Just coming across the headlines right now, Taco Bell has said they have removed lettuce that was tied to an outbreak from its restaurants. The chain will likely recover soon from its, I'm not even going to try to pronounce this, based upon prior safety incidences and how they played out, according to many analysts. The CDC traced the source of the outbreak to shredded iceberg lettuce used in Taco Bell locations in 5 states. And Taco Bell said they're going to remove it from the affected stores. There's nothing like a Taco Bell taco either. So, coast is clear if you want to stop by there and get your dinner on your way home. Oh my goodness. All right, here we go. Let's get back to our playbook, right? The playbook. All right. Once again, start investing early was the first one. Let's go to number 2. Eliminate high interest debt. Don't we all wish we would have done that? Credit card debt, personal loans, title loans. I mean, mortgage loans that are, way above market rates, but you just forgot about it and you just keep paying it every month instead of refinancing, right? How do we learn from this? Go through all your debt. Make a list, just like when you make a budget. Make a list of all of your debt. And most importantly, besides what the payment amount is and what the balance that you owe is, write down what the interest rate is. I have seen clients just about fall off their chair when I made them do this, and they write it down like, oh my gosh, I did not realize I was paying 19% on this credit card. It opens your eyes. But imagine if you're not throwing away money in debt, how much more you're going to have. Number 3, we all wish we would have done this. Bought more appreciating assets, stocks, real estate, businesses. Well, maybe you're saying I didn't have the money when I was younger, but you do now. If you do, remember, this is the time to do it. You've heard me talk of it thousands of times about the importance of non-correlated assets. Don't put it all into the stock market. Use other categories, real estate, non-correlated assets, businesses, so on and so forth. But just think again, as you hear, like when we do the local real estate report with Corey and Dwight, just where we were on the median price 10 years ago here in Northern Nevada and where we are now, record levels. Just think if you had 2 or 3, properties in the portfolio that you bought that long ago. It's just, again, it's almost like the compounding effect of money. Just the value of things always tend to rise over time. Yes, you're going to have some bumps and bruises in the meantime, but stick to your plan. Number 4, increase your savings rate. How many of you now or in the past had a consistent savings plan. I'm talking putting the same amount of money or on a regular basis into an emergency fund. You don't care about the rate of return. You just want to make sure that money's there for the event of an emergency. How many of you have increased your savings rate for your retirement? Right? You got a raise. Maybe you paid off some bills. Did you bump up that retirement savings to make it commensurate? Human nature is no. And as the sign that I have posted next to my desk, the rules of money. Matter of fact, I'm going to read this to you. It's Friday. I can do this. I found this great, or actually my wife found this great poster. I have it sitting again here in my office next to my desk. And I want to read this to you because it comes back to this one. And it's the number one rule of the rules of money on my poster. And this is where I was going to go with it. Pay yourself first. And I'll come back to that. The next rules of money, know how to risk it and how to leverage it. Next, learn how to invest. Don't use credit if you don't have cash. Give every dollar a job. Always make money work for you. Don't be a slave to money. Keep your finances organized. If you don't have it, don't flaunt it. Or I'm sorry, if you have it, don't flaunt it. It's a game. Learn how it works. Have a plan and set goals. Always have an emergency fund. Learn how to make money passively. Boy, where have you heard that from before? Spend less than you earn. So easily said. Use it to solve problems in the world. Don't be a hater of it. And lastly, on the rules of money, it's not what you make, it's what you keep. Didn't that just summarize it so perfectly? And that's where I was going to go on my list here. Pay yourself first, no matter what. And especially you business owners. I don't want you waking up at 65 years old and go, man, paid everybody, got the employees all paid all the time, met my payroll, met my rent, did everything correct. But there's nothing left for me. And that goes even if you don't have a business. Pay yourself first. You are the number one priority. Playbook number 5, protect your family. Well, if you weren't aware, I started an estate planning business and it's going great successes. SpecializedTrust.com, the name of the business is Specialized Trust and Estate Plans. Again, you can find all of the information at SpecializedTrust.com. Again, I'm going to throw it out there again. And many of you are taking advantage of it. My schedule is getting very busy. And that is a 30-minute discovery video call with me to discuss your estate planning needs, see if you even need an estate plan, or if you have an existing estate plan, let us review it. Let's see if there's any holes. I hope there isn't. I hope everything's perfect. But I've yet to find one that is. So protect your family. We do that through proper estate planning. We do it through insurance protection. We make sure that our beneficiaries are the people that we want. And we want to make sure that we have the necessary powers of attorney in the event that we cannot make financial or medical decisions for ourselves. Those are some of the ways that we protect our family. Don't you wish you did that 10 years ago? Number 6, I love this one. You know that. Build multiple streams of income. Imagine if 10 years ago, you set out on a course. And you know, folks, I've talked to thousands and thousands of people over my career. And I don't think I have ever, I was thinking about this as I put this list together. I don't think I've ever had one person that I've met with come to me with an existing financial plan or a portfolio. And they said, John, I created this portfolio for passive income. Everyone creates a portfolio for growth. But imagine if you create also a portfolio for passive income. Remember the other day when I did the show on passive income and I said, how nice would it be to wake up every morning knowing that you're getting paid whether you decide to go to work or not? Work becomes an option. And again, imagine, we're looking back so we don't make the same mistakes. Imagine if we could do that now. Things like rental properties, obviously investments, side businesses, royalties, you name it. I covered it. You can catch the podcast, the YouTube on it. I think, what did I do that? I think Wednesday or no, I think it was Monday I did that topic. But man, it's just, you think about it, it makes a lot of common sense, right? Because why do we invest? We invest to save money, to create a lump sum of money that at some point we can what? Create passive income off of. Well, who says you have to wait till you're retired to start focusing on passive income? Do it now. I'm not saying give up growth, but take a portion of your portfolio and say this is designated to passive income ideas. High dividend yielding stocks, mutual funds, ETFs. Again, side businesses. If you work for someone, you don't want to quit your job, there's a million things you can do for side business. That's passive income. The real estate, obviously. Go out and write a book. Go out and do whatever. Create royalties. Again, let your imagination wander. Just get some of that passive income so you don't regret it 10 years from now. Number 7, what you're doing right now. You're learning. You're continuing to learn. You tune in each and every day to this show. I try to bring you all of my knowledge of doing this for 36 years. Not only what happened today, what I see going on in the future, and what I've learned from in the past, and what I'm dealing with clients. Where else can you get that? I'm not saying that to brag, but that's why I'm in the trenches. That's why the show is live every day. Only show in Northern Nevada like this. Keep learning. Whatever method that you want. Books, podcasts. Again, just to remind everybody, about a half hour after this show ends, so right around 4:30, the podcast is available on Apple Podcasts, Spotify, and then, of course, the live video. You can see my handsome face, wink, wink, on YouTube. We have the full show on YouTube, the entire show is on YouTube, as well as a lot of shorts, some of the best, clips and things from the day's show. There's no reason not to be learning. The other way we keep learning, we have mentors. I love being mentors to people. Though people always think successful people don't want to share how they did it. That's the farthest thing from the truth. I've never found a successful person that has not just garnered in the opportunity to talk with people and teach them what they did. So keep learning. That's why I love this business so much. And I'm so blessed to have spent my career and continuing to spend my career in it, because every day I get to learn. And my goal is I try to pass what I've learned on to you. Playbook number 8, review your financial plan every year, right? This isn't something, it's like the living trust. You don't do it and then let it sit in the cupboard and collect dust. Every year it needs to be reviewed. Review your goals, review your investments, review your tax situation, review your estate plan, review your insurance. That's what a good financial plan encompasses, because your life changes. It's just like an estate plan. It's so similar. Your life changes, economic conditions change, market conditions change. Nothing stays stagnant. So why should your financial plan or your estate plan, I'm going to throw in there. All right, when we come back, I'll wrap it up with number 9 and number 10 on our financial decisions you wish you had made 10 years ago. Welcome back to the John Sanchez Show on News Talk 780 KOH. I was sharing with my great producer, Jack, during the break. Again, it's Friday, so I want to have a little fun with you. I got an email yesterday, I think it was. Yeah, it was yesterday. From the company that we use to record the show, that gets it on YouTube and all the podcasting sites and social media and so on and so forth. It's a company called Riverside. They're phenomenal. But I want to read to you real quickly what this email said. Hi, John. Something big is coming to Riverside. Your AI avatar. Soon you're going to be able to create a digital version of yourself or someone you have permission to represent and turn scripts, presentations, and ideas into videos, even without recording or uploading new content. With AI avatars, you'll be able to create an AI twin of yourself, turn scripts and ideas into presenter-led videos, create more videos without more recording sessions, edit and refine everything in Riverside before publishing. It's here, folks. It's here. I was joking with Jack. I said, in the future, Jack, you're not going to know if you got my avatar sitting here or the real meme. So it's fascinating to watch where everything is going. It really is. All right. I am live with you. You got the real human version of me, at least for today. All right. Let's go back to our final 2 points of the financial decision wish you had made 10 years ago. Number 9 on my playbook, build a business. Turn your skills into income. Again, whether it's full-time, whether it's part-time, whatever you want to do. When you build the business, number one thing, solve a problem. If you think about any successful business that is out there, that is the common denominator to success. You're solving a problem that other businesses either maybe they've solved it, but you figured out a way to do it better, like I've done with Specialized Trust. Solve problems. Create value. And in the meantime, what are you doing? You're building an asset for the future. As I said earlier, you're building an asset not only for the future that maybe you could sell or pass on to generations, but also that's providing passive income and many, many other advantages there. So that's something, again, I don't regret that one. I started my first business at 19 years old, and here I am 62 and still plugging away with them. So I'm a firm believer in that. And the last point, it's non-monetary related, but it's important. Invest in relationships. I'm talking family, mentors, as I mentioned, business partners that are good, professional advisors. Because think if you would have had a great team behind you 10 years ago, where would you be today? And I'll tell you, it's it's getting tougher and tougher, I'm finding, to find quality financial professionals that businesses need to deal with. It seems like everybody's out there trying to make a buck on you. They don't really care about you. Once the deal is done, they're on to the next one. They're not paying attention to you anymore. But imagine having a great financial team behind you starting today, and you can do it. That team, of course, should be your financial advisor, your tax professional, your insurance professional, real estate professional, mortgage professional, attorney, so on and so forth. But think about that. That is something that you can do, and something that we don't want to ever look back and say, imagine if I would have got great guidance from my team, from my mentors going forward. So I'm going to wrap up with a couple questions for you I want you to think about over the weekend. If you could go back 10 years, what financial advice would you give to yourself? Which one of these 10 items I've discussed with you today can you start today? And finally, what decisions will your future self, maybe your avatar, thank you for? So if we have this discussion 10 years from now, and so remember back again on July 17th of 2026, it's now July 17th of 2036. Remember when we spoke about looking back at our mistakes we made in the past 10 years, and we don't want to do that again, and we need to correct these and move things forward? Are you going to be able to say, man, that was a success. I did it. I changed those things. I don't have any regrets. Or are you going to be in the same situation as today? And as I started the show with, none of us can change what happened yesterday, a week ago, a month ago, a year ago. But every single one of us has complete control over today and of our future. 10 years from now, you're either going to be grateful for the decisions you made, for the advice I gave you today, or you're going to wish you had started sooner. But your choice begins today. God bless. Have a great weekend. I'll see you on Monday on the John Sanchez Show. Take care.